Okay, welcome guys to SmartHelping.com financial modeling stream. This is take two. My audio was unplugged on the first take. Um, what I'm doing is three statement financial model integration. I'm going to be doing that on all of these streams every weekday at 10 a.m. Eastern. And I'm going to do the franchisor licensing one first since I just finished that template anyway. I'm also adding cap tables to formal cap tables to every startup model on SmartHelping.com. So, feel free to check out the site if you have any startup financial modeling needs or um, needs in AR and AP, receivables, payables, tracking, inventory forecasting, and or joint venture uh, templates, cash flow waterfalls, all that. Those are my specialties. So check out the site, subscribe to the channel. If you want to support this live stream, it's $5 a month. You can hit the join button. Um, much appreciated to the current members. Okay, so let me real quick. I'm trying to figure out the best setting to get so you guys can see more of the screen too. Let me go to my live stream and test. Okay, sounds working. It looks like it's only giving to row 17. Using the other capture method, I was able to get it to go to, let me try this one. All right, you guys, I think that helped like three more rows, which is actually better. Let me double check what this looks like. Okay, down to row 20. I mean, that's better than 17. That's actually much better. Alrighty. So, like I said, I'll be streaming every weekday at 10 a.m. We're doing just all kinds of financial modeling. So this franchisor licensing model's um, pretty much done. The last part of it I'm going to do is add a couple things to this cap table real quick, and then we'll get into the three statement model. So uh, in doing that, we need to add a check, which these should all equal 0. So this total plus this total needs to equal the total equity. Otherwise, obviously, you're not fully funded in the amount of equity the model is telling you that you need. In this case, it's 1.2 million. So all these should be check 0. Put this in real quick. This plus this. Actually, I can just do that minus the remainder. It's percentage 0. I gotta remember to keep scrolling up. So that's 0. Good. Check, check. This is just making sure you've not assigned too much or not enough equity to all the different outside investors and founders, operators. Oh, what happened? This is a dollar amount. And once we finish this, we'll get right into this. Oh no, that's not a dollar amount. These are shares. And I think I am going to do the percentage fully diluted ownership and show what that cash flow looks like for each entity. I know it might not be used necessarily, but I think it's worth it to put it in here, just for completeness sake, to make it complete. I need this. Oh, sorry. All right. So 0, 0, 0, 0. So what that means is the remaining amount of all these different subtotals equals the total of what was assigned to the remaining participants. So this should always be 0. It's a good sanity check. Okay, so let's start. I'll add this later. I don't want to do this now because I want to focus on the 3-statement model, but we're going to add distribution share per row. Just make sure that I do this later. So we need to, in the control tab, enter, and this is actually important for this, for the 3-statement model as well. I'm just going to bring this up. We're going to have an input for company name. This is Franchisor XYZ LLC or something. Okay, I'll make this a little wider. So all of this logic's all integrated. It's all done. Now the fun begins. So we're gonna go. I'm probably gonna want to be doing this right after the annual P&L detail. So we're gonna need 6 sheets: balance sheet, monthly and annual, income statement, monthly and annual, and cash flow statement, monthly and annual. And these are, the income statement's not too bad, but this is gonna be fun. It's definitely needed. It's just really hard to do these, and we're gonna do it here. All right, where's my I'm looking up for my model, base 3-statement model, because I'm gonna use that as a template. It's gonna need some updates, but we'll see how we go here. Let's see. So I got business name. Yep, that's fine. Okay. We'll get some of that other stuff later. So let's copy in our income statement first. I don't think you guys can see this, but just I'm going to copy it in here. We're going to copy all statements over and match the names so that referencing is easy. So monthly, we'll label this income statement monthly. Actually, no. I need to copy the labels that are in the other one, because this, so we're going to actually sound it out all the way. Income statement monthly, income statement annual, oh, don't care about the weather. Balance sheet monthly, and these are so hard. They're like puzzles. It's really, if you like puzzles, you'll be great at accounting. Because 3-statement modeling, you like work, you build out a little bit, then you build out the next part. Then once that's done, you can go to the next thing, and it's just like a puzzle. It's very, I mean, it's, the value is you really, you can communicate financial things properly. That's what it is proper formal way to communicate that everyone understands. That's obviously studies financial statements. All right, income statement, balance sheet. Oh, I missed. The reason why I want to keep these names tabs set the same is because when I have to do all the referencing, oh, I already did that one. It'll be easier to do it. Monthly, annual cash flow statement. Now we're gonna get tricky here, and this is where each one's gonna be different because we're gonna have like a cap fixed asset purchase table, and that's why I removed the CapEx schedule, and that's why we'll be removing that in all the templates going forward, and all the ones that I update. Okay, income statement annual, monthly, balance sheet monthly, annual, cash flow statement. We also want to bring in, let's see, franchisor. We're not doing any inventory, so we don't need to worry about that. Debt schedule we already have. So CapEx is what we're going to have to bring in. So now CapEx is its own tab over here. Spread this out a little bit. And this will be just generic. For franchisor, it might not be relevant. Maybe an office building, I guess, if you're huge, but um, these will likely be zeroed out. The point is, though, that the logic is going to be here if you need to mess with it, and it will flow through this three-statement model. And the key is this needs to match, or it can't conflict with any of the base assumptions that we're already calculating. Fixed asset 1 through whatever. Cost basis, useful life. Start month, we'll have to do data validation on all of this. And this is a 10-year model, so it's going to have to be extended. This is the three-statement model base template is only for 5 years, so I'll have to extend that out. Give this some formatting. Whatever you do in your modeling to designate what cells are input cells, you just need to be consistent. I like to just do everything in light yellow and blue text is editable, and everything else in white or light anything other than that is not, and it's a formula. Our lines are a little weird. Looks like I did a light style on them. And then show the building is always going to be separate here. with its own schedule because this is going to have to be referenced differently for this net gain or loss, which it's not going to be relevant for this model, but it could be for others. And it might be, I mean, it could be relevant for this. It just depends, but I'm zeroing it out for now. Value, oh yeah, this is all, those will be updated once we fill out the template. Now, the question is, do we want to look at the sale of the business in like, so we've got a cap table, the valuation, terminal value. This is what I did in the main three-statement model that I have as a base template in it. So it does end month, which we know is just going to be the first defined here. That doesn't matter for now. Can you guys even see this? Hopefully. This is terminal value. So we have a terminal value already, which is just going to be what we have entered. We can just pull it right here. And this is net terminal value after seller fees. Where did we put that? Right here. Oh, nope. Actually, so this has it separated, which is fine. We'll just go over to here and pull the net. Now this is the net, I believe 201. Let's make sure. No, it's not the net. Okay. Well, let's go ahead and do, so this is the total. We're going to have to manually do it. And since we don't know what year it might do, we'll have to sum up annual exit value minus seller fees, whatever fees come with that, which can be defined. Let me make sure. Let's see, how do I do this? So this is, yep. We're going to have to go to the monthly to see if I included it in that 201 or not. I just want to make sure. Nope. Okay, perfect. So this is 223, 224. Okay, good. That's another thing that's important with financial modeling and three-statement modeling does help with is making sure you're not double counting stuff. All right, what color do we want to make these? Want to make it a different color than the, let's do, does green look okay? No. Maybe a light blue. What's a good color? Dark blue? No, definitely not. I'm half colorblind, by the way, with red and green. That looks fine. We'll make all these a third box down in that row. Actually, you know what? Let's do a gray. Yeah, that's better. Let's just do a gray. I don't like to do colors if I can avoid it. So there's your three-statement modeling logic. Okay, back to this terminal value here. Um, we have the end month. That'll adjust. This does not matter. Does not matter. And we can actually pull this if this is the only input. So percentage as extraordinary income. So this is like when you sell a business, some of it is going to be counted as dang it, freaking sick. Some of it's going to be counted as extraordinary income, which is kind of like what you're selling the business for above what the fixed assets are worth. And the other amount is essentially gets assigned to your fixed assets because and you're going to have to say, well, what if 100% is extraordinary income, then that's fine, and you're essentially saying that no, um, you're giving your fixed assets away. If it's 50%, then half of the value is going to extraordinary income, and the other half's going to CapEx, excluding the building. And you can see the building has a separate calculation for its sales proceeds. And we will have to add that into this model because this model just does the value of the business. It's not looking at the building value. If there's not going to be one in this model, but I have to model assuming there is. Let's just say it's $1 million, just so I can make sure the logic is working. Let's say bought it for 800, and let's just put one fixed asset in here. So you can see the value at sale, and I'll have to again update this log or the formulas to not reference the other workbook, but this is going to take that extraordinary income amount and apply it evenly over the fixed assets based on proportionally, I believe. And I want to make sure, so I can do the references easily. I want to make sure I didn't change any of these positions, so let me double check. So this is in D12. Yeah, okay, good. And I can, once it's all updated, I can reformat this. Okay, so that's the main things. Now there's going to be other models like an ATM model or like an equipment rental where the fixed assets are a much bigger portion of what's it's like the main business. So we'll have to do some more complex things in those. But for this franchisor licensing, you're just taking rent essentially from uh, franchisees. You don't need to. It's not like the way the business makes money through fixed assets. So this shouldn't be too bad of a template to build a three-statement model for. Okay, let's go ahead and start. So we'll start with our references to the company name, Franchisor XYZ. This is an income statement. Did some nice formatting here. And this will have to be, yeah, we got a reference. So let's see, what did I, some fancy formatting on this. I believe this is the start month. Actually, I can just reference this here. And then the end month. This. Perfect. Let's get rid of the grid lines. So again, three-statement modeling is all about formatting. It's all about structure, proper terms. We'll do 2 decimals on all these as well. So we want to lock this. Now the main, let me see here. So this is 10 years. So we gotta start by putting this all the way out to 120 months. Oh, what happened to my? Oh, right. So I did some uh, fancy formulas on these so that if it's a, I don't know why I did this, but if it's past the exit month, then it goes blank. And now I can't see what's, hold on. Let's update this. Let's just, we're not going to worry about doing that stuff. So we'll just do round up, C4 divided by 12. That's a much better way to figure out the year of modeling. And then this, right, so update the date. Another thing I did, which a lot of people had struggle with in the templates I've been doing, is the start year. Used to be like a date, now it's just literally put in the year, so that should make things a bit clearer. And then within that year, you can always define the varying start months of the project, um, main drivers. Oh, and I can't forget this too. So the cap table is going to have to be brought over to like these grand totals for percentage of um, this percentage here and here, as well as the equity contributed, is going to have to be brought over into these high level items, which is it's going to flow right to it, no problem. It'll be easy to this and here, and then that will flow to the distributions. So you can see the overall amount going to investors versus owners, and then you can also see the granular because I'm going to add it by month for each slot, the cash flow. Because this is assuming everything's pari passu for the investors, but it's not. In many cases, some investors will get more percentage relative to the money they contributed compared to what other people did. It's all just depends on valuations and different deals. So this will show the aggregate, but the detail in the cap table will show each one individually. So yeah, so I did if C5 is blank to blank, otherwise if E date is greater than, looks like the end month. Let's see if I want to keep this logic or not. So it's nice having a three-statement model, and I sell just a general three-statement model template for $45. It makes you have to think less. So I can just kind of follow all the formulas, and then I just kind of look high level, make sure the references are right, and all the formatting's there for me, and all the different things. So that's one really nice feature about using templates in general. Because if I had to do this all from scratch, it's going to take a lot longer, and I'll have to think a lot more. And I don't want to have to think if I can avoid it if I already have all the stuff in place to tell me. Okay, so now we got up to 10 years. Make these 15 wide. Okay. All of this we can now fill out for a lot of the three statement model is going to be driven from your uh, income statement, monthly income statement. Whole like most financial forecasts are based on that. There's some other caveats, but this is the main driver. So we have income. Let's look at the actual model. Go to the monthly P&L detail and see. So do we want to, the question is, do we want to separate out income streams? I say sure. And what we can show is what totals do we have? So these are the franchise fee, ad fee, and fixed fee. So those three, we got three streams. That kind of works perfectly. If I wanted to get more in depth, I could also show the revenue for each location type for each type, but there's no, for the income statement, you want to try to stay high level if you can. So this is going to be total franchise fees collected. This is going to be ad fees collected. And, oh, I have 4 slots. I only need 3. This will be upfront fees. So upfront ad franchise. I'm going to clear this out, but I'm not going to delete it because I want the positioning to be maintained of the income statement. So when I go to do the other statements, I have the right reference. It'll be easy to check. All right, so we just plug in our income we have here. This is no deferred revenue or unearned revenue. It's just, you're collecting a percentage of gross receipts from these franchises. So it's pretty simple. Ad fee and one-time fees. And you'll see in this particular model, the one-time fees eventually are outweighed by the upfront, or the upfront fees are eventually outweighed by the ongoing. And just so I can see what things look like, let's put this exit month 1 back. I want to make sure the integrity of that all still makes sense. If I stop the model before the very last month. Okay, that's good. So the income statement kind of blanks this out. These are 0. Okay. So we have total income, and we have monthly income change as well. Put Control C5. So on the subtotals, I did do this logic. Let's drag this on over. Okay, looks good. Do 1 decimal on the month-to-month percentage change. Now, cost of goods sold. So this is where we get a little weird. We're definitely not going to have inventory, so we don't need to worry about that. I kind of said like the costs for onboarding as well as the cost, they're more variable costs. I'm going to actually, that's a better term for this. And there's other Well, let's see. I mean, there's one other type of variable cost in the OpEx down here, just a percentage of revenue that you can define manually. But the actual dynamic logic that will adjust based on the amount of franchisees over time, and that's based on the scaling assumptions. Those are really the variable costs that we want to look at. So, then the term becomes contribution margin rather than, I mean, gross profit is the same thing, but this is going to be total variable costs. It's just it's a better and more accurate term to describe what this is. And we're going to do, let's see, how many do we got here? So we have total onboarding, and then we have, and these change directly with the amount of franchisees that are coming into the franchisor ecosystem. We'll clear this out, it's not needed. And remember, we've got some really nice logic here to show the break even per franchisee added. And essentially based on your revenue fees and the revenue you think they're going to make and the onboarding costs of the franchisor accepts, it shows the break even month, the amount of months it takes for the revenue of the franchisee fee revenue they're paying takes to cover those onboarding and costs. All right, so this would be just this reference here, onboarding. It'll be easy to check this too at the end because we can just make sure our net income here equals our EBITDA. I can't remember what I ended up calling it. Hold on, why is this 0? Oh, shoot. I need to start at column E. I was way over. Not in DF. And when you look at a financial model, it kind of seems daunting at first, but after you start working through it and go slow, just understand everything, it makes a lot of sense. All right, so total variable costs. Hold on, why is this stopping? Ah, because of this. So what's our reference? Control C5 is the end month. Copy down. Paste that into here. And I'll take a quick note, everybody. If you want to support SmartHelping.com, we've got hundreds of financial models and tracking tools and stuff for all kinds of businesses. Go on over to SmartHelping.com. There's bulk discounts by category and volume, as well as you could purchase all the templates that I have for a one-time fee. Uh, Go over there, have a ball, check it out. There's all kinds of, if you like math, logic, and kind of creating order out of chaotic things, that's what's going on over there with a financial lens. Okay, this looks good. Profit margin or contribution margin, if you call it. Now, operating expenses. So we could do two things here. We could do high level and just go R&D total, G&A, sales and marketing, and then anything else. Or we could list every single individual cost here. Now, I think if someone wanted to go see the granular, they could just look at the detail. I think for the income statement, we're just going to do the high level. So we got general and administrative. We've got sales and marketing. We've got research and development. And then I think I did those percentages of revenue as a G&A. Other costs as a percentage of revenue. Yeah, okay, so these are just going to be considered G&A, which is fine. We'll put that in there. So there's three main cost items. I'll clear this out for now. I don't want to delete rows yet. Also, this can all be white. Oh, no, I don't want to clear everything. So we simply go over here to G&A and oh, we're gonna do one other thing. So, and this is gonna have to be will be a general thing. The fourth one is gonna be startup costs, and it's going to assume those hit in month one. And I think that's the only real caveat we got. So there'll be that. And those will be considered all taxable. If they're not, you can just manually go in and define what is and what isn't and finesse the formulas. Sales and marketing. R&D. But in generally, those startup costs, oh yeah, and then for G&A, we want to include those other percentage of revenue. In general, for startup costs, it can get, I mean, the most of the almost every template I have allows you to account for like ongoing burn before revenue starts. So you'll probably be able to get most of those what you're considering startup costs in there, like paying for payroll and other different things. But if you have one-time things that don't really fit into the fixed costs, and you've got to enter them on the startup cost tab here, that's fine. It's just a matter of what's taxable and what's not, and that's just going to depend on your situation. Also, we'll have um, we've got the CapEx, which is separate now. So this will account for anything else that's like a uh, one-time cost in a certain month. And all the tax effects of all that's going to be accounted for. All right, so as we go down here, we got our revenue, cost of goods sold, gross profit, OpEx. Let's get our total, subtotal. Up. So all these subtotals, I did this. I thought it was a good idea. I don't know if it is or not. To make it go blank if it's past the exit instead of just 0. Because I've already got it in, I guess for the 3-statement model base template, it makes sense. But for this, I've already got that logic happening in the monthly detail. So there's the template already knows when to start zeroing out the years or the months. All right, total cost, percentage of revenues for that. Now we're down to EBITDA. So now we just make sure a check to make sure we've referenced everything right. Um, we sum this up, make sure it matches. So this is 345, 809, 963. And this is 346, 660. All right, we're missing something. So that's a good check, an easy check to do. We'll just say, and actually we can do, we'll do the check right on there. This minus, oh, shoot. I know what's the difference is. These, so okay, let's think. So we've got startup costs hitting income statement, but in the monthly P&L, that hits cash flow. Hmm. So let's make sure that's the difference, I guess. So we can do a different type of check at the end of the row, or yeah, at the end of the row to make sure. So if we know that's the only thing that can be causing a difference, we can come here and do check and say the sum of this minus the sum of this minus this here. Oh, oh shoot. Gotta come up a row. Oh, minus or do I add that? Okay, yeah, add it. So that's good. So accounting for the startup cost, EBITDA matches exactly with our monthly P&L, which is good because those two, the monthly P&L detail and like these distribute or this executive summary needs to match the three statement model exactly. So we know the EBITDA is going to be only off by the startup cost because we're throwing those up into there as operating expenses. So this is a good check. Startup costs are always going to be in period 0, so we know that's reference is fine. All right. So now we've got interest, which we've already calculated. If there is any debt being taken out, the interest is here, and that's going to be tax deductible. The main thing you do when you're trying to also integrate different models into different templates, you want to make sure when you're complete, you do a find and do a find and type the whole workbook and just type in .xls, and that will show you if you've got any references to other workbooks like this. See, three statement model, monthly and annual. So that's a different workbook. You don't want those in there. Those are issues. So that's a great way to check when you're doing this to make sure you haven't left any formulas in there that are not right. So search for the whole workbook for .xls. It's a nice little quick tip. I title? Oh. This is just CapEx labels. If that's blank, then blank. Otherwise, pull it in. Shoot. What's going on here? What did I label? CapEx B3. And I gotta figure out why I put labels in here for numbers, but hold on. Or B4 is the first fixed asset. Stand by. Where am I? Oh wait, can you guys see this? Oh yeah, I think you can because it's pulling over. Okay, so this is the main template I'm working off of. Trying to see what happened with this income statement reference. Okay, B3. So I'm bringing over the building as well. Okay. If CapEx B3 is blank, then blank. Otherwise, I don't need the little stuff at the top. Okay, we got it in there. So that's correctly referenced. And then, so depreciation is obviously an expense. Um, that's tax deductible and important if you have that going on there. We want to remove these references to the other workbook, but keep the logic. So if C5 is greater than that, then blank, that's fine. Oh, my wife is, oh man, she looks miserable. They got us in super tight masks and face shields. Oh dear. Okay, so if it's greater than C6 then blank, that's fine. What have we got going on here? An if and an and statement. So if and C5 is greater than, oh, so we're just basically saying if it's in the depreciation term, pull the depreciation. Otherwise, do not pull it because it's fully depreciated. I gotta get rid of all these apostrophes. Dang it. Oh, there's one more. It's nice when there is an error. Excel will highlight the relevant part of the formula that needs fixed. So here, okay, good. Yeah, we got the building one, and then we added that one fixed asset just to make sure this logic is going to flow with us. Oh wait, did I change that to go to the last month again? No, November 30. What happened here? Oh wait, yeah. Whoa, wait. Did I auto format the hold on, let's go to December. How fancy did I make this thing? Oh no, it's still blank. So did I just not go over? I guess I didn't drag everything over to the 120th month, so let's do that. I don't know how I missed that. I'm so confused. Wait, because this was here. Let's go back, set this back to 1 month. What do we got now? Yeah, there's, so you guys can see. So that's blanking out the last month. That's good. Good. Okay. Now, let's get into extraordinary income. Sale to business. We go, and this is why I keep the references, so now I don't got to think about what's being referenced at all. Although Control C6, I think that needs updated. And this, come on. Yeah, that's what I thought. Because I don't call it, I called it, oh, I called it terminal value. Wait, what do we call it here? Oh, valuation. Okay, so this is terminal value. And C6 actually should be C5. So we just drag that over. All the way. Let's make sure we got formulas all the way over this. Because I didn't, apparently. Okay. So this is the net terminal value. And then net gain loss from sale of assets. We're going to start updating that fixed asset schedule next, probably. Oh man, yeah, this is, I remember doing this. Okay, so that's the total. Let's just follow and see. We'll see how we go here. So net gain loss from a sale of asset. We obviously know the number's not right yet, but we can do this. Put the formula in. And we're updating this to terminal value. I think that's what it was. Uh, Clear this out. And see, this is why I keep the tab names the same because, and it's going to be really important when I get to the other statements because I don't have to try to think about how the references need to go, which is really nice for doing this. So J3 to 18, I'm pretty sure I didn't update any of the CapEx stuff. I'm going to bring these over. I'm going to bring these all over here. So 3 to 18, but hold on a second. Is that assuming the building too then? I guess. Yeah, I guess that makes sense. Because this is all we're really looking for is this number here. Okay, we'll drag this on over. And let's try and figure out. So see, this is just, and this is an easy one. So I might only be able to do, I might be able to do one of these a week. This is just, three statement modeling is just so cumbersome. But I mean, it's gonna make all the models that much more valuable, so that's why I'm doing this. But all right, let's get into the CapEx. Let's update these calculations. So that's fine, that's fine. This is not fine, so we need to do. This is taking the terminal value. This is assigning a portion of oh, a portion of this here. This is actually going to be a lot higher. Say only 5% is going to be towards fixed assets. So we're saying then this is a value by itself, but we have here $1 million. Geez, we're gonna have to make it. I'm just trying to make it the numbers make sense. Just obviously every situation is different. Let's put it at 99%. Oh, we're gonna actually do 1.8. So let's just say this was like an expensive thing. $1 million. We got 2.6. So terminal value D10. Remaining amounts we had CapEx. Okay, that makes sense. That's the right thing. I'm seeing why these are negative. Book value at sale. Okay, so this is gonna update this, and here we're using the H lookup, so we definitely need to make sure we're having the same positioning. And this is what I use these numbers for the row count. Okay, that makes sense. And now we're getting, so see, this is referencing the balance sheet monthly, which we don't have filled out yet. So we can't really get this to be an accurate number until we do that. but we can still get the formula correct. And then we'll just move on to the next statement. Okay, so this is make sure nothing's being referenced. So see here, we still have a bad reference. All right, so this is good for now. We've got income statement monthly. This is fine for now. What else? Oh man, so this tax calculation. What I'm gonna do is we'll try and finish this monthly income statement and then we'll move on. I think actually this is one of the most complicated or long parts. Hopefully I can move faster tomorrow morning on the rest of this three statement model. All right, so income statement annual. Again, this is nice. I have these references. Now, what is Control C9? Oh, tax rate. So I'll have to add that in. And C10. Okay, so what is, let me go to the other model here. What's C9 and 10? Ah, corporate and long term. Okay, perfect. That's great. Go over here. Now we don't have space. We're going to put this down here. So 9 is 25, 10 is 26. So we're going to show 25, 26 on this. And this is all blank because the income statement annual is still blank because I haven't done that yet. And then net income. Oh, yep, we've got to update that formula. This is C5. What's CapEx J2? Is that the total? That's the total net gain loss of the building. And the other part is being calculated here then, I guess. Well, to make sure that's working right once we get numbers in here. All right. So thanks for tuning in. Probably gonna be done here because my throat's getting a little yucky and I'm getting a little burnt. Next week we'll bring in the income statement annual, the balance sheet, or not next week. I keep saying that. Tomorrow. I'll be streaming tomorrow morning at 10 a.m. again. We'll bring in the balance sheet, cash flow statement. Hopefully, I don't know how far I'm gonna get, but the hardest part was just formatting, getting everything in, getting the tab names referenced right. Um, and let's see, do I want to do the cap table now? I mean, I guess I could real quick. This won't take long. So let's just put in the first month here. And we'll just type like this is just a distribution summary. And then just take the fully diluted ownership times the monthly. Oh, actually, shoot. So the way we're doing this is any negative. Oh, how are we going to do this? Because the idea is that the equity is all up front, and then any negative cash flow period was accounted for in that. And then if it's a positive cash flow period, there's distributions. But if you have like a year in the future where you have a huge spend, for whatever reason you have a negative year, I guess it's super rare, but if you had that, um, technically your distributions would be net of that negative period, or however many monthly periods were negative for that year. Um, you know what? So the easiest thing to do is just make it annual. We'll make these annual periods. That's the best way to do this. So that guarantees it'll be correct. And here we'll just go, first of all, format it the same. Let's just reference the annual. 2, 3, 4, 5, 1, 2, 3, 4. And now we simply take the percentage times distributions, and we'll do times the total here. And then let's also bring, so this, just gonna wrap up a couple. We'll do this. We'll also do the percentage for the that needs to flow over to the control tab for the investor percentage in their amount. Vice versa. What is going on here? Oh, sum. Oh, distribute. Wait, J has to be locked as well. Lock that up. You guys probably can't even see this. Let me scroll over. All right, so there's annual still not. How is that? There we go. So this, in theory, will match. Well, first we gotta update the references. Let's copy this. This is what people get paid a whole bunch of money to do, by the way. Just sit here and try and build these models, and it's very tedious, and you got to make sure things are accurate as well. All right. Now the check should be this plus this minus the total distributions for the year should equal 0. That's the check. Now, if we go over to our control tab, we are now going to reference in, so we know 1.2 is the equity needed. This is now going to be a reference instead of input. So investor equity is going to be cap table, total investor equity right here. This number. And then the percentage they get is going to be in aggregate, this percentage here. And now also owner equity is referenced. Owner equity required, we can just do this minus this, same calculation as the other one. And then the percentage they're getting is, and it was actually already in there because it was just 1 minus that, so 86.25, which should match, no, 82, oh wait, 86.3. Oh, 86.25, that is, if we round it up, that matches. I'm sure. We could do 2 decimals on that. Let's do, and again, if you don't know, a nice little trick in Excel is if you hold Control, so click first one, hold Control. If you need to format a bunch of tabs at the same time, you can hold Control and do that instead of doing one individually. That one, that one, that one, this, and this, and this, this, here. All these need to be 2. Okay, so now investor or owner should equal the amount they're getting in distributions here. True. And the investor total should equal the total in aggregate here. True. Good. So those are all your checks just to make sure. And there we go. Now we have an annual distribution summary within the cap table. Okay. That's all I wanted to do for today, so that's all done. I'll be using this cap table formatting in all templates on Smart Helping that are startup models will have this logic. That's what I'll be working on every day to do. Hopefully to see you guys tomorrow. I'm hoping that doing this every day is going to build the audience better because I'm here every day. Don't forget to check out smarthelping.com for all your financial modeling template needs. We've got so much stuff there to check out. Go see it. And yeah, next week or tomorrow we're gonna do income statement, annual balance sheet, and if we have time, cash flow statement, and hopefully then we'll be done with this template, which is awesome.